Hi, today is Monday the 24th, and this is SPX Outook for the coming week, last week of August. Everybody's kind of waiting for a strong reversal, but the trigger, the catalyst hasn't been found yet. Tech stocks are shooting to the stars, and we don't really know where the market is going, as it is largely overbought, and it is also a very narrow bull market centered on a very few large tech stocks. So this is the SPX CFD, 24-hour CFD, so that it provides more bars per day, and this is the 1 hour chart. Here we see that the market on Friday tried to dip again, like after the FOMC minutes on Wednesday, and then recovered strongly. It closed on 33.97 and it opened overnight, and it's pretty strong. And as you can see, I plotted here a fib expansion, and it shows that there's a target on 34.09. The question is whether there will be some breakout effect with short sellers, because there were quite a number of short sellers placing their stops just above 3400. So will the market shoot up further? It's possible that this is the first target here, and of course the stronger resistance now is on 3440. Let's now have a look at higher time frames, valid probably for a day or two. Here as well, we see that the market is quite bullish. The resistance has not moved yet to the 3440. It will probably soon, unless this is of course a fake breakout, and the market will then return to the same range. We are still in the same channel. There is a possibility then that the market will try and reach 3440 and the channel highs sometime this week. As far as support is concerned, we see now that the bullish resilience level is more or less on pivot and also close to recent lows, and that probably confirmed the bulls try to protect that level about 3360, and the first salient fib is actually now on 3330. Over the next few days, it is likely that the market will stay in this upper channel. Now lastly, let's have a look at the daily chart, which should be also quite bullish. So after hesitation on 3400, the market is trying to break out here as well. So at this point, now that 3400 seems to be breaking, although this is not 100% confirmed, we have to wait for the market to open to see whether the bears come back strongly and go back to the same range. But we have to assume on a go with the flow attitude that the market will try and then high again. The all-time highs from March have been now passed by 10-15 points, which is a very narrow margin. So this is still margin of error. So we can't discard the market. The sellers will try and come back here. The general macroeconomic environment is not that great. Therefore, this narrow bull market is not healthy, and some strong correction is definitely in the cards. Also, if we look at what we sometimes call a natural angle of attack, for example, when this channel line is probably overall acceptable. I mean, if the market grinds up on a reasonable gradient, the market can actually sustain the bull market. When it goes too fast, it tends to react with some selling. Here it had time to actually pause or stall on 3400. So if we discard this anomaly, the potential anomaly here, the market is actually now had reached an equilibrium between buyers and sellers. So it is possible that the market would keep grinding up after these pulls. So let's go back to the 1 hour chart for today. Here we see the same resistance level for bulls. First level of 3330 and then close to 3300. It seems to be, maybe this channel line is not properly drawn and it could be slightly higher. So we are still somewhere in the channel, and we see on this time frame that there is a fair resistance here on 3418, stall level on 3427, and the major source of resistance would be on 3440. So unfortunately for market neutral traders, this is still a grinding up market, and we have to prepare that correction may be pretty strong, and that could happen, if not this week, maybe early September. Thanks for watching, and bye for now.